So in the previous video, we talked about some general principles and how we can use this TDI over here. So if you haven't watched that video, check it out. And today I promised you that I'm going to be showing you how you can use moving averages in order to trade, giving us further confluence in order to use this TDI and the moving averages to get our entries, right? So I'm just going to be doing that, showing you how we can use moving averages, and I'm going to do like a trade review, not a trade review, but like an analysis, showing you how I would react in each and every situation that is presented here on the TDI, right? So stay tuned and watch and learn, because the only way you can learn this TDI is through experience and getting to know how you'd react in such different conditions, because there are many variations of setups or patterns that this TDI can show you. So if you want to learn more, stay tuned and watch till the end so that you can benefit and from everything that I'm going to be showing you. So in the previous video we were on boom and crash, so today I'm just going to be showing you on step index, so that you can see that this TDI also works on volatility indices, on currencies, on everything. Though I haven't used it much on currencies, but this strategy is actually based on currencies, so of course it works, right? So how are we going to be doing this, right? So first of all, let me just there are many moving averages that you can use, but personally I only use these two, right, on the main chart, right? So the first moving average that we're going to be using is moving average of period 50, method exponential, and apply to close, right? And it's the blue one on my chart, right? And then we click what, save. And the second moving average that I use is the 200 moving average, and it's the purple one on my chart, right? And then we click what, save again, right? If we just want to add, we can add the 800 moving average, right? But I don't want, we're not going to be using it that much, because today we're only going to be focusing on those two, the first two that I gave you, right? So that I can make this simple for you, so that it can be easier for you to understand. You have to learn a bit by bit, because if I just give you all the concepts at once, you might not be able to understand exactly where I'm coming from, and you might not be able to understand this strategy, right? So moving averages, what are moving averages? Moving averages are sort of just like our support and resistance, just that they are dynamic support and resistance. We are not the ones who are going to be drawing it. We are not the ones who are going to be drawing these moving averages, right? So moving averages, let's say this 50 moving average over here, this blue one, right? So we're just saying on the 15-minute time frame, right? The 50 moving average over here, right? Let's say at this point over here, this 50 moving average, this position is determined by averaging the previous 50 candles, right? The previous 50 candles, which are these ones, right? So we are saying that from this point up until that point, the average, that's where the moving average is, right? So the bigger the moving average is, the more candles it averages, right? So the lower it will be, right? So the lower and the more powerful also, right? So you can use moving averages from moving average period of 3 to going up to even 2000, right? But the larger it is, the lesser the market is going to react to come to it, right? So as you can see, let's just take this for example. Right over here we've got the 50, the 200, and the 800. As you can see, if you've seen the future examples that I'm going to be showing you, the market always comes down to the 50 moving average most of the times. If you count how many times the market touches this 50 moving averages, 50 moving average, there are multiple times, and the times it reaches this 200 moving average are quite less, but the times it reaches this one, this 800 moving average, are even more less than the 200, right? So as you can see over here, we've got right over here we've got 1, 2, yeah, so like almost 2, right, reaching the 50 moving average. Here we've got 1, and the 800 moving average, there is none, right? And over here it didn't even quite reach the 800 moving average over here also, right? So the 800 moving average, we are not going to be using it that much, right? So over here, how are we going to be using our moving averages? What are we going to be doing in order to use our moving averages, right? So first of all, right, well, I want you to learn to trade with the trend first of all, right? Since we are just beginners, I'm not going to be doing much about reversal patterns. I'm going to be doing I'm going to be showing you how we can enter for continuation setups, right? Of course, I'll share a little bit about what on reversal patterns for those who are a little bit more advanced, but if you're a beginner, just stick to the continuation patterns that I'm going to be showing you, how we are going to be entering those, right? So over here, how we're going to be using this, how we're going to be doing this, right? So over here, right, what we are going to be looking for first is the 50-200 cross over here, right? So the 50-200 cross is when this blue line crosses over this purple line, right? Whether it's to the upside or to the downside, right? So whenever they cross and this blue line is on top of the purple line, right, we know that the market is in an uptrend, right? And whenever these two lines cross, right, let me just check for an example so that we'll be able to get the grasp of this, right? So let's take this for example over here, right? Whenever these two moving averages cross, right, when they cross over here, right, and the blue moving average is below the purple moving average, this shows us that we're in a downtrend, right? So this is not that hard. You can actually get the hang of it just by installing your moving averages. You see how these moving averages react, right? So what we're going to be doing over here is whenever the market crosses over this 50-200 cross, is some call it the golden cross, right there. So it shows us that the market is going up for a while, right? So it's a continuation setup, right? It's a further confirmation that we are going to be buying, right? So over here, right, using our simple price action, just from what we can see over here, right, as you can see, we broke this high, and we didn't quite break this high over here, right? So but we broke these previous highs over here. So the market is in an uptrend, right? So we've got a breaking market structure and a retest, right? So over here, if we're going to be using our support and resistance, right, our zone flips, right, this over here would have marked this level over here, right? And when the market put back to that area, we'll be getting our entries, right? So how are we going to be doing this? Using our moving averages, right? So when we get our crossover here, what we're going to be doing is we're going to be waiting for the candlesticks to pull back to the 50 moving average over here, right? And when they pull back to the 50 moving average, what we're going to be waiting for is just a simple candlestick confirmation, right, or a crossover, right? So when the market pulls back to this 50 moving average here, right, we're going to be looking for candlestick confirmations, and then we enter, right? So over here, let's take this for example, right? So you can use the strategy on the 5 minute, the 15 minute, any time frame that you choose. You can use this strategy. It always works, right? Not always, but it usually works. There's no strategy that always works, right? So you have to work in order to understand when to enter and when not to enter, because no strategy is 100% perfect. You're going to have to learn how you are going to be entering, because if you enter all the time risking a lot, so you're going to lose some money, right? So you're going to lose money, in fact. So you have to use proper risk management and be able to calculate and see which setup you are supposed to enter, right? So let's take this for example over here, right? So when the market put back to the 50 moving average over here, right, what are we supposed to be looking for first, right? First of all, we want to see a slowdown in momentum. As you can see over here, this was also good, because as you can see, the candlesticks in this region over here, they've got a lot of wicks, right? This showing that the market doesn't have enough selling pressure to continue going down a lot further, right? So these wicks over here, these are good to see, right? We can drop down to the 5 minutes so that we can see exactly how these were looking, right? But as you can see from this picture only, right, as you can see, there are many there are many wicks, many shadows over there, showing that there is a drop down in momentum to the downside, right? So when we get this green engulfing candle over here, sorry, let me take my marker, right? When we get this green engulfing candle over here, that's when we'll be taking our entries, right? So on the TDI, what are we going to be looking for? What should we be looking at, right? So first of all, here on the TDI, right, as you can see, when the market pulls back to the 50 moving average over here, what we have to look for over here is on the TDI, is the green line around the 50 level also, right? And over here, as you can see, it's also around around the green level, right? And then you see the condition of this MBL, right? And as you can see from this point over here, it was so like just flat, and when it's flat, it's also good, right? What we don't want to see is when it's caving, right? I will show you an example when I get one, right? But over there, we could have entered that that trade, right? And the reason why I want us to enter using this after this 50-200 cross is because if we hold that trade, we know that it's going to be going forward for a while, right? Of course, this doesn't work all the time, but if we hold that trade, know that you'll be in it for a while, depending on the time frame that you are on, right? As you can see over here, if you entered over there, right? So you could have had an entry over here, an entry over there, right? Because of the candlestick confirmations over there, but this one could have been riskier to enter because, as you can see, right, your entry will be after this engulfing candle over here. Let me show you this engulfing candle over here, right? And where is the next high? It's just here, right? So that's where your first TP is, right? And your stop loss is over here. So this one is not worth the risk, right? Rather than when you are comparing it with this one, right? You enter here, right? And your first TP is over here, and your stop loss is over here, right? So this one is almost a 1:1, right? So this is for the first TP only, though we know that if it works, the market will even continue further. Hence my main target using this strategy is 3:1, right? So depending on the risk on the account, right? So that's how you enter using this strategy, right? So right over here again, as you can see, we've got another buy entry, right? 50-200 crossed first of all, right? That's what we're looking for. That's what we first look for, right? And then we check the candlesticks over here when the market is pulling back to the 50 moving average, right? Over here, it started off with some momentum, right? But then it dropped, showing us showing many weeks over there, right? And then we enter when there's a candlestick confirmation or a crossover of the green and the red line on the indicator window. So that's what we'll be looking for. Same over here again. We had already had our crossover here, right? Pull back to the 50 moving average, right? And as you can see right over here, you've got some sort of a flag formation. This a flag is a continuation pattern. If you didn't know, or if you want to learn more, just comment in the comment section down below about flags, right? And it shows that the market doesn't have a lot of momentum because it's going down and then up a little, down, up and down, right? So it shows that the market doesn't have enough momentum to keep on pushing this trade further, to keep on pushing this market further, right? So right over here, personally, what I would have done, right, of course I would have entered when the market pulled back to this 50 moving average, and then you get this first green engulfing candle, I would have taken my first entry, right, and my stop loss below, right? And maybe my stop loss would have been hit by that wick, right? And I would take another entry over here when we've got another engulfing candle, right? And as you can see, the first TP is over here. Let me mark this again, right? So let's say we entered over here, right? Stop loss over here, first TP over here, right? And of course, maybe our TPs are over there. But after it reaches the first TP, you can just keep on trailing your stop so that you don't lose the money that you'd have made already, right? So that's how we use the moving averages alongside with the TDI, right? But so what we have to also be careful about is the MBL. So you have to learn to see how the MBL is reacting, right? Mine, I changed it to purple today, if you didn't notice, right? I changed my MBL to purple on the indicator window on the TDI, right? Why? Because I like it. I just like it. I thought it'd be more clearer when it's purple, right? So how do you look at this one? No, this one was already okay, let's take this for example over here. Right over here, as you can see, the green line broke out of the purple MBL, right? And we've got a pullback to the 50 level and the MBL, and over here we've got another pullback to the what, to the 50 level also, but we don't take our entry over here. Why? Because moving averages crossed over to the what, to the upside, right? So we're not looking for our buying opportunities there, but as you can see, the trade actually worked, though we were not in it, right? Let's check, for example, let me look for an example where this didn't really work, where this didn't what, or give us what, a good signal, a good what, a good entry, a false entry. Let me check. Let's take this for example over here, though it worked quite a little for a little while, right? So over here our moving averages had crossed somewhere below there, right? And over here the market put back to the 50 moving average, right? And over here we also around what, around the level 50, right? And we've got what, our crossover, so we enter somewhere in this what, this point over there, right? But what do we have to be careful over here? As you can see, the MBO, the purple line over here, is so like gradually pointing to the what, to the downside, right? So right over here, what you have to do is you have to be very careful when the green line reaches this what, this MBO over there, right? And as you can see, it reacted what, to the what, to the MBL. And I told you that the MBL is a support and resistance. So it's so like a support and resistance, so you also have to be careful and watch how the market reacts when it reaches what, when it reaches the MBL, right? So that's just what you have to be careful about, right? So yeah, I think I've made this video a little bit too long, but that's it for this video. If you like the content, like, subscribe and share. Peace.